One very beautiful thing about swing trading is that you can be able to forecast or catch hundreds of pips into the future, like this example here, while risking just a small portion of account, meaning that with patience you can be able to double your account just in one single trade if you can hold the trades for days, or as long as you can, right? So in this video I'll be sharing with you guys a swing trading strategy that you can use in trading volatility 75, forex pairs, indices, whatever market you are trading, as long as you're a price action trader. So basically we are going to be identifying, I know the strategy, identify major turning points in the market, how to plot key zones, how to forecast hundreds of pips into the future, how to determine our entry and exit points, and how we can lock our profits as price move in our favor. So you want to watch this video to the end so that you'll be able to learn this strategy.
Okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out.
So now we are talking about swing trading strategy, guys. And swing strategy will simply means you have to forecast a very long move, or let's say you forecast hundreds of pips into the future, and you'll be able to hold the trade for long. Now in order to be able to hold trades for long, you have to determine measure key levels in the market, right? You need to first of all go to bigger time frames like the daily time frames, right? And then you look for measure levels, right? So like you see in our course outline, we want to identify measure turning points in the market, and then we plot them out before we start forecasting our entries, right? Now this is VIX75 are presented in front of us here. What you simply do is we go to the daily time frame, which is the 24 hours. We are going to identify major key levels, guys. Now this was the initial move that we forecasted, right? Okay, so from there you are going to see major support and resistance levels where we are going to be plotting them out, right? So this is our major support and resistance zones, as you can see here, right here. This is our measure zone. So what you do, you plot them out. Okay, so we plot these zones out. Remember, support and resistance, they are zones and not just single lines. So they are zones in which price tend to react to them many times, as long as it could keep respecting. So right now we are seeing a very long-term short trade, but for now we are going to concentrate on what I'm going to share with you, right? So now once you have identified this, you already see that these are measure zones in the daily, measure resistance, measure support. In within this trend you are going to see minor resistance and minor support zones, right? We are still going to plot them out. This will determine our take profits in our first targets, right? These are minor support and resistance zones. We have the measure ones, right? Now we have the probability that as soon as price hit this measure zone, it's mostly going to turn as it hits this zone here. So what we do, we can just plot out our measure and minor. So look at these rejection areas here, right? Just plot them out carefully, okay, so that this will determine our targets. All right, now what we do now, we drop further now to smaller time frames. We are going to be looking for confirmations. Okay, now you can see this initial trade. I'll show you how we are able to look for confirmation on this trade here, right? So let's just take you there. We are looking for what confirmation. As soon as price hit this zone here, we are not going to be entering based on the daily time frame, right? We are going to look for our entries on smaller time frame, because once price hit this zone here, there is a high probability that price will most likely move right down, right? So price will most likely move right down here, and it could move in form of a swing, right? It could move like swinging in a smaller time frame until price get to this zone down here. But we have to somehow look for an entry point, right? So when we drop now maybe to our H4 and then H1 time frames, where we are going to be taking our trades based on, we are going to look for confirmation. Now let's take this swing for instance. Now we saw that price came and hit this zone here. Now this was based on a reversal chart pattern mostly, which is the double top and the double bottom. So the double bottom pattern is from when price creates a low, goes up, comes back and fail to create this low, and finally what happened, it breaks above, and sometimes it will come to retest, and then from there we are going to enter based on our smaller time frame. While for a double top, we have just a reverse of the double bottom. Okay, it could be maybe H, all right, and then price, after creating higher high, when it reach here, it creates a high, comes back, fail to create the next high after hitting a key measure zone. What happened? It will come sometimes and break through, and that is where we are going to look for our entry, and then we'll start catching the move right down, right? So basically, let me show you the other example, the trade here. Okay, now if you look at this trade here, for instance, you see that as soon as price came and hit this major resistance zone here, remember that's the zone we first identified on a bigger time frame. Now we have dropped to the H1 time frame and the H4 time frame where we are going to be taking our trades. All right, now you see now price creates what? A double bottom here. Okay, it creates a low, it goes up, comes and creates the low, and is unable to break, or is unable to break and continue further because it's in a key zone. Now as price breaks through, what happened? We wait for price to come back and retest. In this situation, price came and then retested around the neckline here. Okay, this one we usually refer to as the next neckline. So we enter here, our stop loss usually should be below the pattern itself. Our stop loss can be below the pattern because it's a swing trade. We don't want to be placing our tight stop loss. If we are placing a tight stop loss, then we don't want to stay long in the market. Maybe if we enter here, then we can be looking to be exiting here. This is our first target. Looking at this to be first target, and then we are looking at measure zones like this to be second target, right? So what we do now, we wait for, as we enter now, our stop loss is below there, and then you realize that price is going to start swinging upwards, creating higher highs and higher lows. You go to smaller time frame, you are going to see other major higher highs and higher lows, guys. That's how simple you are able to catch. Just look at the risk to reward ratio there, and you see that price move up very powerfully. Now price has moved and it has hit a major zones. This is a key turning point in the market. All right, now this is the importance of our multiple time frame analysis. Now this is a key turning point, and for people who just bought blindly will not understand why all of a sudden price is already reversing like this, right? Price is already reversing powerfully here. This is because price has reached a turning point, which is a key resistance level. Now if you look at it, price has created a double top pattern. Now our essence of dropping to smaller time frame is to order to refine our entries, get those sniper entries, all right? Because if your entry based on the daily time frame, guys, it's not, you know, you are not going to get that sniper entry, and you are going to have a lot of risks your account so much. So from here now, there is a possibility that price could retest, because you see now that it has created what? That high. Okay, come create another high, which is a double top, come now broke through, right? We have bearish rejection, all right, from here. And then if you had entered, let's say based on this direct breakout, and we see this bearish rejection, and the candlestick is really pushing downward. If you look at it, the candlestick is really pushing downward, indicating that the wicks is pushing up. The bulls have succeeded to push price down, and the body of the candle, look at this green candle here, has closed right below here, indicating strong bearish pressure. So for someone who entered here, should have already been in profit. So when you take your trade, you might want to be exiting the first target. Remember, you always identify these minor zones here. Those could be our first targets, so that you can lock your profits when price moves to a particular extent. And you can see that there could be a high probability that price could, you know, probably move like that. Okay, maybe if you want to maybe place your stop loss like that, and then you want to be moving down, maybe having that long-term forecast that price could move like this, all right? And then you are targeting these first zones, you are targeting this first zone, second zones, and all of that, all right? So this, it comes with a lot of practice, guys. So as you see, it comes with a lot of practice and patience. And if you have not yet mastered how to trade, to hold trades for a very long time, it could be difficult at the beginning, all right? So it means you have to maintain some patience, or maybe try testing it out on a demo for some time when you train your emotions, because you know you'll be able to watch price move in your favor. Let's say you see price move in your favor like that, and then you are in deep profits. All of a sudden you see a very strong reversal that will reverse and enter your stop. So there are very few traders who can have that patience to watch trade reverse after getting very deep profit. Maybe price will pull down, create a low, maybe start reversing, entering into your profit. And I mean, if you don't have the patience, you find it very difficult sometimes to bear that, because you see sometimes price will move like that and then move, swing, moving, swing, moving, swing, and it will take days, it will take a very long time. If you are a swing trader, you should understand what I'm saying. And remember, you should also trail your stops. All right, now if price start moving and then creating swings like this, for instance, now what happens if you create a low, reverse, create another low, right, and then reverse? What you should do now is you should move your stop loss down. Okay, you can move your stop loss down, and then you trail your stop loss below. You put it below the higher low. Okay, this is a higher low here, and then when it creates another low, all right, and then reverses, okay, and then create another low, what you do, you can move your stop loss down, and then you place it at the previous high. This is the previous, because now automatically these zones here will act as what, minus of resistance. Obviously, as price move and create new lows, these are going to act as minor resistance zones here. These are going to act as minor resistance zones here. That's why you see you can trail your entries. Guys, don't be greedy. You can also take some trades on profits, all right, while you allow maybe one of the trades, as it pulls back, place your stop loss, you move your stop loss further. You don't want to allow a trade to move down like this and then come back and hit your stop loss. That will not make some sense, right? So like you see in this swing, for instance, price was creating higher highs and higher lows. All right, as soon as price creates a new high and create a low like this, you realize that if you had moved your profit, you just move your stop loss straight up, okay, to this zone. It creates, as it creates another high, move and creates another high, you move your stop loss. Let's say you are targeting these zones up here, you move your stop loss further, you move your stop loss further, all right, until price goes and hit your target. That is how you can trail your stops. So basically, we have addressed most of the issues: identify major zones, plotting them out, forecasting hundreds of pips into the future, determine our entry and exit points, and then locking our profits, guys. So basically, that is how beautiful this strategy could be. Now you can see we have price already dropping powerfully. All right, price is dropping already powerfully, and sometimes price could still tap, price could still move like this, maybe just induce traders move up again, tap into the zones properly before finally falling. Remember, trading is all about risks and being able to forecast. Now the risks and the reward should be worth it. All right, sometimes you will move, still tap into the zone up before maybe forming some other patterns, and then maybe before it continue moving down, right? But remember, we always have our stop loss in case of unforeseen circumstances. We will be able to make it. So thank you for watching. I hope you found this video helpful. Please give me a thumbs up. Just hit on that thumbs up button. Also make sure that you comment on what you are thinking, and also make sure you subscribe by hitting on the subscribe button and notification bell, and see you in the next video.